Support for Carolina Business Review provided by Grant Thornton. Operating in more than 100 countries, our tax, audit, and advisory professionals specialize in helping companies unlock their growth potential. Blue Cross and Blue Shield of South Carolina, where healthcare is changing for the better. Find out how at ahealthysc.tv. And by Sunoco, a global manufacturer of consumer and industrial packaging products and provider of packaging services, with more than 300 operations in 35 countries.
Well, it seems as we head more toward the holidays, the pace of activity accelerates certainly, and we are making up for some of the slower, hazier summertime activity and schedules. Glad to have you back. Welcome again to the most widely watched source of Carolina business and public policy for the last 25 years now. I'm Chris William, and what are those barriers that keep us from having an even better scenario of growth in this region? We'll talk about the issues of the day, and later on, longtime Carolina senior banker, Wells Fargo's David Carroll.
Major funding also by Novant Health, bringing you world-class technology, clinicians, and care when and where you need it. The Duke Endowment, a private foundation enriching communities in the Carolinas through higher education, healthcare, rural churches, and children's services. And by Blue Cross and Blue Shield of North Carolina. Who's responsible for rising healthcare costs? Join us and many others in a candid discussion at letstalkcost.com. On this edition of Carolina Business Review, Lew Ebert, president of the North Carolina Chamber, Fred Green III, president and CEO of the South Carolina Bankers Association, and special guest David Carroll, senior executive vice president of wealth brokerage and retirement, Wells Fargo. Now, here's Chris William.
Hello, welcome to our program. Fred, welcome to the program.
Thank you, Chris.
Lewis, nice to have you back.
Thank you.
So, Lew, we start with you. Continuing resolution was the rallying cry around the North Carolina General Assembly these past sessions in the summer and the early fall. Lew, what do you think? What do you think they got right?
You know, I think this session, you get past the resolutions and the time frame, is probably an overwhelming referendum on pro-growth policies can and does have a big impact on our economy. So in this session, for example, the corporate tax has been reduced from a high of 6.9. It'll go to 3 in 2017. The personal income tax was at its high point 8, on its way down to 5.5. Data center tax credits, aviation tax credits, JDIG. You know, net, you've taken the 44th worst tax climate for business and gone to 7th best, or 17th best. And at the same time, you're also able to invest more resources in your priorities. So you've been able to invest more money in education, increasing minimum teacher pay, more money for universities and community colleges, a $2 billion bond that'll be on the ballot in March. So transportation infrastructure funding at a very high level. So it's pretty much a case study in what happens when you create the right mechanism for businesses to grow, create jobs, create a more friendly atmosphere for capital. Economic opportunity and jobs grow, abound. And the job creation numbers in North Carolina are astounding. We're now moving at the 1990 pace. So we've had 3 years in a row of 65,000 new jobs. So the Carolina growth story is really, it's been over time. But this last session, which just concluded, I think put a real exclamation point that North Carolina is becoming, if not the best place in America to do business.
So as you sit next to one of your NGO colleagues here across the state line, South Carolina, arguably, and Fred, I'm going to give you a chance to wade in on this, South Carolina has arguably done a pretty bang-up job when it comes to economic development. Is the field level for North Carolina? What does North Carolina need to get their mojo back when it comes to getting some momentum?
Well, you know, what we've looked at is, you know, when we lose a deal, why is that? But more importantly, 85% of all the new jobs in our state are coming from companies that already live there. So how do you make the state more competitive, more attractive? So things like the single sales factor for taxing, we've had a very onerous formula on business that we've now eliminated, as most states in the Southeast have done. But it's beyond tax. You look at regulations. We were a highly regulated state that were very difficult on manufacturers. Tort reform in the legal climate. We had the 20th worst legal climate for business. Now it's 7th best. So you see what's happening is we've identified from the companies that already live in North Carolina, what are the impediments to growth? Regulation, tort reform, workers' comp, and found a way to remove those obstacles. So you're basically solving problems that the companies that live here have said, if you fix it, we'll add more jobs and grow our business.
So Fred, South Carolina State House had a predictable session. They got out on time. It's been a while since the State House was in session. What did they get right, and what do you have in front of you to either address what they didn't address or what they got right? What's the biggest issue?
Well, we got a lot right, but I'm going to go to the second part of that question, which is what do we have ahead of us? The session bogged down on the budget and infrastructure funding. To the person, everybody agrees we need to fix the roads, we need to fix the bridges, we need to be able to continue the economic development success we've had, and that's a result of fixing that infrastructure. There was a lot of debate. Everybody agrees we need to do it, but as the session ended, there was no solution.
Well, infrastructure. It was supposedly going to be job one. Speaker Jay Lucas talked about it a lot. The Senate talked about it. Didn't seem like they hardly moved the needle when it came to not just funding, but just the spirit of doing something around transportation and infrastructure. How critical is that? Has the state passed a tipping point here?
We're probably close to the tipping point. South Carolina roads, the number of miles of roads that South Carolina is responsible for would be about the 4th in the country in a relatively small state. We've had a lot of deterioration on those roads. I'm on them all the time. It's a safety issue. It's also an issue for tourism. Tourism is a great industry in South Carolina, and of course economic development. If we can't fix those roads, I think it'll hurt us from an economic development standpoint, hurt us from a tourism standpoint and a safety standpoint.
So Lew, infrastructure and transportation in North Carolina looks like there was some movement. Probably not to what a lot of people would like, but do you feel like North Carolina is addressing this issue appropriately?
Yeah, you start back, it was 1989 since the last time any significant changes were made to how we funded infrastructure. In this session, we probably found another $700 to $800 million of recurring revenue annually to invest in infrastructure. Bridges, roads, ports, combination of capping the gas tax at a new floor, introducing new fees, stop at the rate of the Transportation Trust Fund, which was being used for everything but roads. So now you have a recurring annual basis by which we can invest in infrastructure. One of the fastest growing states in America, metros like Charlotte and Raleigh are doubling in population by 2030. We simply made the case to our legislature and the governor that we couldn't afford to wait. We launched a statewide campaign, spent about $1 million to make the case on this is the time the legislature had to invest in the long-term future of our state. And they enthusiastically embraced that. They moved forward with a bold, ambitious plan to build more roads. They have a formula by which they can get more roads done for less money quicker. So I think you could always do more. But I think this last session, again, part of the big successes have been legislators identified a concern and a problem that's an impediment to economic growth, and they took a bold solution. Well,
we've got a couple of minutes before we bring a guest on. Fred, in 2012, there was a historic data breach in South Carolina. It was 3.6 million. They say, the headlines say Social Security numbers. I'd like to think people whose data was breached, including credit card numbers. This was a big deal. Data breach and cybersecurity is no small matter, and it's no small expense. How punitive is that to banking, financial services, and ultimately to the customers and the banking customer experience?
Well, Chris, on that point, in addition to the Social Security numbers and credit cards, more importantly, it included everything on that tax return: address, children, income, and checking account information. So we, as a banking industry, worked with the governor's office to try to mitigate that risk. We sued the Department of Revenue, friendly lawsuit, so the Department of Revenue could share with member banks those clients of those banks whose checking account information, as an example, was included in that. And we developed an infrastructure that would allow an early detection. And thank goodness, to this point in time, there's been no evidence of any fraudulent transactions associated with that data breach. So we were lucky. But they continue all the time. The Target data breach was the biggest one. What happens, what a lot of people don't realize, is when there's a data breach, and the banks aren't necessarily the ones that created it. In fact, there really hasn't been one created by the banks, but we're the ones that have to pay for it. So going back to the Target data breach, to help customers, most banks decided to reissue all cards because of just the volume of card activity. And that's a huge cost to the banking industry.
Lew, in about 30 seconds, and I'm sorry, I'd like to drill down a little bit more. Fred, come back to do that. We're not going to give it appropriate time. Lew, in about 30 seconds, Future of North Carolina Forum. This is something that the North Carolina Chamber has done now for a while. It's coming up again. What's talked about? How do you get that word out?
Yeah, we're interacting heavily with CEOs in major companies. 3 years ago, we outlined a plan called Vision 2030. We have a bold plan to grow the economy by 2030, focusing on education, infrastructure, competitiveness, and entrepreneurship. So each year we gather key business leaders from around the state to talk about how we're doing, what's the progress we're making, where's the opportunity to continue to get better. And via our dashboard 2030, we're also keeping score. So it's a great way that we keep our customers in front of us and make sure that we're moving the economy forward at the pace that really is the pace of business and the pace of today's economy.
And we are not an infomercial, but I do want to ask you, the dashboard is actually a live website?
It is.
That's pretty extremely interactive. How do we get to that website? What is it?
It's Dashboard 2030, and we keep track of 4 key areas in Vision 2030 with 80 different metrics. So people can go on and look right now how we're doing. 4th grade test scores, 8th grade math scores. Again, it's our commitment as a business community to make sure North Carolina is the best state for business.
Gentlemen, thank you. Please stay with us. Coming up on our program, Katie Belk-Morris is the chair of the Belk Foundation. It's not only growing, but it's increasing its focus on education. We'll find out what that organization plans to do about education in our region. Also, U.S. Senator Thom Tillis from North Carolina will be back on our program, as well as the Honorable Joe Wilson from the 2nd Congressional District in South Carolina coming up as well. You know the old saying, what doesn't kill you makes you stronger. Well, rewind to 2008, and many banks came dangerously close to being killed off. In fact, a couple did, namely the safe haven venerated Wachovia. Or did it? You could make a very good case that the bank, as it was, went on to become, through acquisition, larger, stronger, healthier, more prolific by many banking standards than ever before. A man that was on Wachovia's operating committee and a heartbeat away from the top job, and is a heartbeat away from the top job now, and on Wells Fargo's operating committee, is with us now. He leads the 38,000 employee, $2.2 trillion in client assets, and $227 billion in deposits and loans. He is Wells Fargo's Senior Executive Vice President of Wealth and Investment Management, David Carroll. David, welcome to the program.
Thanks, Chris. Pleasure to be here.
Thank you, David. And in the interest of full disclosure, I am and have been a Wells Fargo employee for about 26 years. David, let's start with 2008. You know, now that you got some space and time and the heat's off to some degree, what was the lesson learned for banking and you personally in 08?
We learned a lot of things since 2008, and a lot of it you could say we had to relearn it, but I think about 3 major areas. One, back to the fundamentals of credit. Excessive use of leverage throughout our economy, looser underwriting standards. These are fundamentals that our industry's focused on for over 100 years, and collectively we got away from good, sound banking practices in the banking sector and outside the banking sector. Princeton professor Alan Blinder talks about financial markets, and he says financial markets are a zoo and we need good zookeepers. There were holes in the regulatory framework around oversight, inspection. Those have been strengthened significantly. In the third area, I think about the complexity of the financial marketplace these days. In what we do at Wells Fargo in the investment arena, I don't see much correlation between the complexity, the ever-growing complexity of financial instruments and the ultimate success of those instruments in creating returns for clients. And so most of those are kind of fundamental issues around operating discipline, sticking to your knitting. The system is systemically much sounder today as a result of some of the the regulatory changes that have happened, but the companies, the individuals, the communities, and it was individuals, communities, companies, and governments, all share in the lessons that we learn.
Does it make the case to tweeze out investment banking, capital market management away from the general banking model?
The Dodd-Frank Act, the Comprehensive Financial Reform Bill that was passed now 5 years ago, has gone to great lengths to wall off insured deposit-taking activity from riskier market activity. Beyond that, though, personally, I think it's pretty hard to say that a Glass-Steagall type of arrangement would have prevented that. What happened, it was largely, as I said, around loose credit, over leverage. There were financial institutions, banks, investment banks that were levered 20, 30 to 1. Our company today has about twice the level of capital that we had proportionally 7 years ago. So I think our model, sort of the universal banking model, we think is stronger. We operate 92 businesses at Wells Fargo. They complement each other very well. So I would disagree with that.
Yeah, okay. Lew?
You know, David, I find bankers are obviously as close to the economy as you can get in this day and age. But when you look at how businesses are feeling about the economy, what's their appetite to take risk, to borrow money, I mean, what's your mood of business, say in North End, South Carolina, from your perspective?
Business has been good. I mean, we feel good about the fundamentals in the economy. There's been a lot of discipline put back into the marketplace. There's much more responsible use of leverage. Households and businesses have delevered. I do feel a little bit of slowing, though. Factory orders are at an 8-month low. The jobs number this morning was a disappointment. I think we printed 142,000 jobs on an expectation of 200,000, but not fall out of bed, fall off the cliff kind of slowing. But I do think, to your question, sentiment is as important as any of these statistics, and there's still a fair number of unknowns out there. We're, 13 months away from an election. We still live in a very polarized society. People aren't highly confident around what their taxes are going to be. You talked earlier about how heavily regulated we are in North Carolina, the same as all over the country. So I think there is some tentativeness out there. People want a little firmer footing in terms of their view of the future.
Great. Fred?
Dave, as you pointed out, the banking industry has rebounded nicely. The capital levels in the industry are at an all-time high, more than made up what was lost in the Great Recession. Year over year, earnings this past quarter were up 7%. The two big headwinds, interest rate environment and regulatory cost.
Right.
Could you talk about those?
Yeah, we haven't had an interest rate increase from the Fed in 9 years. And most banks, us included, very much live off of the spread between what we pay on deposits and what we charge on loans. And the industry has seen a 7-year steady decline in margins, and our savers and investors have felt that. And that headwind gets a little stronger every year as investments or loans from prior periods pay off at higher rates. I'm not an astute Fed watcher. I think had it not been for this jobs number, we might have expected a rate increase. The sentiment now, the odds of a Fed increase this year have dropped this morning from 44% down to the low 30s. Most people think they'll now push it into 2016. You are beginning to see credit spreads widen, though. And I mentioned this earlier, I'm a little concerned about the unintended consequences of 7 years of ultra low cost money. It leads to misallocation of risk. We're seeing that in the high yield market, and certain asset classes are showing signs of a bubble. But we've been able, because we operate so many different businesses, we have fee income businesses that aren't as dependent on the net interest margin as others. But truly it's a headwind for the industry. And cyber, you talked about that earlier. Our board has identified cyber risk as the #1 risk for our company. More important than credit risk, more important than interest rate and market risk is cyber. We made investments earlier this year at Wells Fargo that by the end of next year will represent an incremental additional $1 billion in spend purely on cyber.
And is that an ongoing, regularly occurring $1 billion plus?
We're in uncharted territory, but the way we are looking at it is in addition to our baseline run rate expenses.
In 30 years ago, David, 1984 roughly, there were 18,000 banks. At the end of the second quarter in 2015, there were I wrote it down, almost 6,000 banks. That's a third of the banks that were in business 30 years ago. Is this consolidation trend continuing, simplifying, less banks?
I don't know how much we're simplifying the environment, but I do see further consolidation, and it's the confluence of investments in technology, consumer preference. We operate the largest retail physical footprint of anybody in the country and are very committed to it. Our 6,000 plus stores are just as important to us as they were 20 years ago, but because of technology and 25 years of heavy investing in technology, it takes fewer people. Our fastest growing channel at Wells Fargo today is digital, is mobile. We have something like 1 billion interactions a month with our clients electronically. And the cost of maintaining the traditional physical footprint is as high as it's ever been, but we're complementing that with online and digital.
Yeah.
I mean, as one of the biggest banks in the world, obviously you guys have a great perspective on how American business competes not only in America, but overseas and abroad. If you had to pick 2 or 3 areas where, if you were king for a day in DC, you'd say, let's fix these 3 things that would give our businesses a chance to better compete, I mean, what do you think they would be?
2 things come to mind. The first one would be energy. I think we need to repeal the 70s era vintage prohibition on exporting oil. There, I think, have been 1 approved license to export liquefied natural gas, but we can immediately improve our own circumstances, competitiveness, and become totally energy independent well before what was predicted not less than a year ago by 2020. That seems to me a pretty easy thing to do that would benefit our country and industry in general's cost. I think if you talk to anyone that's in the manufacturing business these days, they will express great concern over the degree of difficulty in becoming licensed here. The EPA, this gets political in a hurry, and I don't mean to get political, but the burdens on businesses today from a licensing and government approval standpoint are extremely difficult. And it's more burdensome than anywhere else in the developed world. The developed world, not to mention the secondary and third tier markets.
Sure.
Fred.
Well, and you compound that. I mean, EPA has new rules effective yesterday on clean air rules that make it enormously difficult for everyone to comply. And I know the show will air in November, but today's actually manufacturing day. So it's an important part of our economy. And obviously we're excited by, I think the energy that's being created there.
Well, the drop in energy prices really bodes well to bring manufacturing back to the United States, but that alone won't do it. We've got to have a more balanced, favorable environment from a regulatory standpoint.
A couple minutes left.
David, you mentioned Dodd-Frank and maybe some of the benefits, but it also has some unintended consequences that have hurt banks' ability to issue credit, primarily on the mortgage side. Now, you guys are big mortgage lenders, but some of the community banks have even gotten out of mortgage lending because of the complications of those regulations.
In less than a minute, David.
Yeah, the mortgage area we're the largest mortgage lender in the country. We feel that pain just like banks of all different sizes, and it has to do with the putback risk. We all generate these mortgages and sell them into the secondary market to Fannie Mae, Freddie Mac, FHA. And the putback risk and some of the legislation that add very onerous penalties for future putbacks are such that it really causes some banks to consider not even being in the industry at all. And I feel like that's a bit of a regulatory overreaction that over time will get addressed, but in the short term it does put constraints on credit creation.
And in about 2 seconds, what kind of school grade would you give the Fed on their managing of the interest rate issue?
Boy. They stopped the recession from turning into a depression. I'd give them an A- up until this point. Okay. We need higher rates.
Thank you. Come back. We'll have more dialogue about that. That's not fair. Thanks, David. Thank you, Fred. Good to have you here. Lou, welcome back.
Thank you.
I'm Chris Williams. Until next week, hoping your weekend is good. Good night now. Bye.
Major funding for Carolina Business Review was provided by the Duke Endowment, a private foundation enriching communities in the Carolinas through higher education, healthcare, rural churches, and children's services. Blue Cross and Blue Shield of North Carolina. Who's responsible for rising healthcare costs? Join us and many others in a candid discussion at letstalkcost.com. Grant Thornton. Operating in more than 100 countries, our tax, audit, and advisory professionals specialize in helping companies unlock their growth potential. Novant Health, bringing you world-class technology, clinicians, and care, when and where you need it. Sunoco, a global manufacturer of consumer and industrial packaging products and provider of packaging services, with more than 300 operations in 35 countries. Blue Cross and Blue Shield of South Carolina, where healthcare is changing for the better. Find out how at ahealthysc.tv. And by viewers like you. Thank you. Promotional consideration provided by Business North Carolina Magazine. For more information, visit carolinabusinessreview.org.